Okay, the presentation is here. So we'll discuss about data, and then we'll discuss some use cases of AI that we are dealing with. So first of all, what is data? Like in finance, everything is data. Every time I make a call to my bank, it's a data. Every time I swap my credit card, it's a piece of data. Every time I'm transferring money between my accounts, it's a piece of data. And banks and financial institutions together generate over 1 exabyte of data every year. That's enormous amount of data, and it's more than all the films in the world together. And it looks like super powerful, right? With these data, financial institutions should be able to make much better investment decisions, come up with personalized investment decisions for their customers. With this data, they should be able to streamline their operations, make much better efficiency out of it, reduce repetitive processes. With this data, they should be able to create like hyper-personalized customer journey that will keep customer retention and customer success very high. And with this data, they can actually do very high level risk management and fraud management. And as you can guess, this is not happening like every time I'm applying for a loan or whatever. It's a lot of manual process. Customer service is very bad. Usually average bank having 15 to 20% customer churn, which causing a huge amount of revenue loss. Almost 40% of fraud is being able to pass through the gates, and banks are facing the huge fines. So the reason is that 90% of this data that banks are gathering is being untapped. So it's either not properly stored, properly orchestrated, or they are just not able to get the value out of it. So before we jump into the reasons why banks are not being, or financial institutions are not being able to get the best out of this data, we'll discuss a couple of very basic but positive experiences with AI. So one of them, JP Morgan implemented machine learning based document analyzing platform, and they claim it saved thousands of hours for them. Robo-advisors are managing a huge amount of portfolio assets and making even without human touch decisions. And Bank of America launched Erica, which they claim handled 100 million customer requests, which is not exciting anymore in this age. But let's discuss what are some of the big challenges that financial institutions are facing. So first of all is legacy systems. 80% of the banks still rely on AS400s or other like decades aged infrastructure. CIOs usually avoid going through the full digital transformation, delegating it to their successors, and like they can get maximum of AI with these legacy systems. The second one is poor data. Even though they have this big data, it's unstructured, uncategorized, and they can't get too much insights from this data. And AI is not a magic. Like you can't give a garbage to AI and expect that it will come up with a perfect solution. The third blocker of like bigger adoption of AI in financial industry is ethical and social considerations. Like people don't trust AI. None of the customers would like their loan to be rejected because AI thought that way. And like financial institutions' reputation is on the stake, and there is a lot of social considerations that AI can be biased and jobs can be lost. Another like bottleneck for financial institutions is very strict compliance, which more than 300 new compliance regulations coming every year, and there are huge fines. So and AI is very strictly regulated in most of the world.